Some people think, oh yeah, 9%, I'm gonna go for that one. Absolutely. Well, you gotta keep in mind, sometimes the withdrawal rates, the rate that it's multiplied against are not as high. Hey, John Stevenson, the Guaranteed Retirement Guy. Appreciate you guys tuning in today. I want to talk to you about growth annuities versus income annuities. Growth annuities, well, they're for growth, income for income, right? You can kind of get a hybrid though with the income. You can with the growth too, but they're more like withdrawals. They're not like guaranteed income streams. So I have people contacting me about a lot of products actually with Nationwide, and also North American and Allianz, the Allianz 222 annuity, which has got really, really good indexes right now with really good participation rates and cap rates, but they were not so good 7 years ago. And some people will complain and they'll say, hey, I haven't earned a lot, right? And I tell them, well, it's an annuity. You're not going to earn as much as the market. And when you bought that annuity 7 years ago, rates were not as good as they are now. When they can't get options cheap, then they're not going to be able to give you high participation rates, high cap rates. And they're like, oh, okay. So, but right now, that's really good. There's really good interest rate environment. It's the cap rates, the par rates are high. So you can get some really decent growth in those annuities while having 100% market protection, which of course most people, they will purchase a growth annuity because they want out of the market, but they also want growth. And they want the growth of an index because they want more than what a MYGA will pay them. A MYGA is a multi-year guaranteed annuity with the fixed rate. So with an income annuity though, you can get some that are paying a guaranteed, like one right now, gives you 7% every single year compounded for 7 years. So it's called the Market 7 annuity. And it's a pretty phenomenal annuity right now. It's paying people a lot of income, deferred income. So it's best for deferrals. And it's working out great. People lock in a ton of income because of how it works. There's another annuity with Corebridge that is paying like 9%. And you got another one with North American. They're paying 8%. Now, keep in mind, some people think, oh yeah, 9%, I'm going to go for that one. Absolutely. Well, you got to keep in mind, sometimes the withdrawal rates, the rate that it's multiplied against are not as high. So sometimes you can still get a higher rate of return from one that's paying you 7% because their withdrawal rate is like 8% instead of 5%. So what happens is with an income annuity, if you've got something that's paying you, let's say 7%, and it's compounded every single year, you're going to have a huge income value at the end of, let's say, 7 years. Let's say you just let that thing ride for 7 years. During those 7 years, you're also going to have a withdrawal rate that rises every year. It might go from 6.7 to 6.8 to 6.9 to 7.3. It goes up incrementally every single year. So what happens is you might have something that you start with, let's say it's 500 grand and it grows to $1 million. Okay, that $1 million is going to be multiplied by that higher withdrawal rate. So let's say $1 million times 0.07. Well, it's 70,000 a year. Okay, what if you let that income benefit grow to 1.5 million? And now the withdrawal rate is 7.5. That's pretty good. We're making 6 figures a year now. That's the power of income annuities. Income annuities pay a ton of income because you have high roll-up rates that are guaranteed, absolutely guaranteed. Does not matter what the index does. The index delivers nothing, absolutely nothing. You still get that guaranteed rate of growth for the income, not the account value, but the income value. Okay, the income value of the account. There's two separate values. You've got the income value and you've got the account value. The account is that's whatever is it's earning from the index. So if the index is the S&P and you've got a 50% participation rate, then you're getting half of the index. Simple as that. But of course, if you got a roll-up rate that's 8%, well, guess what? Your income value account is going to be much, much higher. And that's what's so important for income. If your whole goal is income, then absolutely you're going to want an indexed annuity that has that income rider attached so you have that high growth rate guaranteed for your retirement income. Hope that helps. I just kind of want to talk about the main differences of these growth strategies versus income strategies. They both have a growth component, but they're both for different reasons. Anyways, hope you enjoyed the video. Really appreciate you watching. I hope you book a call with me. If you're looking to, if you're looking to buy an annuity, I hope you'll do it through me. And the reason for that is because I'm going to show you everything. And if I get paid a lower commission, I'm still going to show it to you. Okay? It's important for transparency, and you'll hear that over and over in my videos because I preach it to my agents that I train, and I preach it to my clients. I tell them, look, you need to be working with someone who's going to show you everything regardless of what he's getting paid. Don't work with someone who's only thinking about their own pocket. Okay, work with someone who has your best interest at heart, who wants referrals from you. Okay, someone who has integrity. I'll ask you a few questions, see what your age is, your state, and what you're looking for. If it's growth, great. We'll look at the best annuities for that. If it's income, we'll look at the top ones for that. And I'll pull it up right there in front of you and I'll answer your questions. So, and of course, if you decide, hey, you know what? That's what I want to do. I'll help you set it up. It takes about 45 minutes and then about 3 weeks for everything to get finalized, depending on how the money's transferred, and that's it. Anyways, hope you enjoyed watching. Please like, subscribe, share, and we'll see you in the next video. I hope you enjoyed today's video. Have you anything to add to it? Do you have a question? Do you have a concern? Anything you want me to clarify? If you do, please go to the comments section and let me know.